is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. As G7 leaders pledge indefinite support for Ukraine, Russia defaults on its foreign debt for the first time in over 100 years. We're live in Bavaria, Germany, for the latest this hour. Road to recovery. Early June indicators point to an improvement in the Chinese economy. Meanwhile, Xi Jinping prepares to visit Hong Kong this week for the 25th anniversary of the British handover. And as the crypto crash of the last few months, the industry's Lehman Moment, as panic spreads across the sector, we look at the biggest threat yet to its survival. But first thing is first, we have some great stories to cover, but this is what the market is doing. European stocks, you can see, supported, gaining 1.2%. They're supported by technology gains over in Asia. I know global stocks are extending gains. Again, this is after they posted their best performance in a month last week. After the turbulent couple of weeks we've had, it's very clear that markets, or certainly traders, now have a bit of belief that actually whatever monetary policy does, whatever central banks put in place, they could engineer a soft landing when it comes to the economy. I'm looking at mining leading the advance on the Euro Stoxx 600. Chinese technology shares, of course, helping those Asian markets. And you can see the European technology stock 600 gaining some 2.8%. Now, a lot of the story will focus, of course, on dollar strength. We have the U.S. Bloomberg dollar index and Bitcoin 21,370. Now, if we look at the various countries in Europe and get that map up for you to look at the divergence, for example, between a Portugal and an Italy and things like that. One of the other things we're watching out for is, of course, a possible sovereign bond crisis because of fragmentation in Europe. I'll be going over to Portugal and Sintra, which is really the European Jackson Hole for central bankers, and we'll discuss monetary policy and inflation. But for the moment, you can see all of the European countries are holding up pretty strong, with the CAC 40, one of the biggest gainers, gaining 1.4%. Now, leaders of the G7 are expected to commit to providing indefinite support for Ukraine. And they're meeting in Germany. They're also said to be discussing a cap on the price of Russian oil. Now, this comes as Moscow defaulted on its foreign currency debt for the first time in a century. So let's get more with our Europe correspondent, Maria Tadeo. So, Maria, war in Ukraine looms, of course, over this G7. What exactly is top of the agenda?
Yes, Francine, and this is entirely a meeting. And by the way, I believe there's a leader flying and hovering over our heads right now, going into the mountains, where, of course, have been gathering now for 2 days. And a lot of this dominated by the war in Ukraine, particularly after the shelling of the Ukrainian capital just hours before the meeting starting. Now, Francine, in terms of the communique, we are expecting today that G7 leaders will say, they will reiterate, there will be, quote, open-ended support for Ukraine on the military aspect, on the economic, but of course also too when it comes to potentially more sanctions on the Russian Federation as long as the war continues. The other big sticking point, and that is unclear whether there'll be an agreement by the end of the session, is that cap on oil prices. For G7 leaders gathered here, they recognize that it is very politically difficult, toxic, and hard to stomach the kind of revenue that Vladimir Putin is making as a result of the tight supply in the market, but also some of the second round effects of sanctions. And they talk about a price cap on Russian oil. But this is a very technical discussion, as you know. It is very hard to implement in real life. And they also worry about some of the big buyers right now, like India. Will they side on this big coalition? This is the most active discussion going on, but it's not clear whether an agreement will be reached.
So, Maria, you mentioned energy. How much of a discussion is, of course, about this price cap on Russian oil? And will all of the leaders agree on this?
Yeah, and you know, this is an idea, Francine, as you know very well, that has been pitched a number of times by the United States. The Germans at the beginning, they weren't very convinced by it. Yesterday, the French say, quote, they don't oppose it. At this stage, the Italians are incredibly vocal about the fact that you have to cap it. You have to put a ceiling on it. So there is some political momentum going into this. The fact that you have emerging markets like India, South Africa also participating on this could give it a much wider global momentum too, but they also recognize the implementation could be very difficult. The other big issue too, Francine, has to do with the gas story. The oil is seen as a moneymaker, but gas is a geopolitical weapon. There's a lot of concerns, of course, about Vladimir Putin unilaterally cutting off supplies from now until the end of the year, perhaps trying to sabotage the storage for European countries. Remember, they have been given a deadline. By November, they have to get their storage full so they're able to weather the winter, but it's unclear whether unilateral moves from Russia could put an issue on that and could threaten that.
Maria, thanks so much. Maria Tadeo there with the very latest, of course, from the G7 in Bavaria, Germany. Now, early June indicators point to a Chinese economic recovery, in particular after the lifting of the lockdown in Shanghai. Now, for more, let's bring in Bloomberg's chief Asia economics correspondent, Enda Curran. Enda, always great to start the week with you. What level of recovery are we actually seeing?
Well, it's mostly on the industrial and production side of things. There's a survey from Standard Chartered, for example, Francine, that looks at 500 small companies saying things are getting better. That stands to reason because the lockdowns and restrictions have eased to some extent. There's also a pickup in construction, also better car sales in the first few weeks of June compared to 1 year ago. But on the services side of things, still some pain there, as you would expect. The kind of contact-intensive sectors, so retail sales, catering and the like, are still suffering pain. But nonetheless, it suggests perhaps the economy is hitting a bottom.
So, Enda, we know that Xi Jinping will go to Hong Kong this week, of course, for the handover anniversary events, despite rising COVID cases. What message is he sending to Hong Kong?
Well, the question will be, Francine, what signal will he send about what role can Hong Kong play in China's economic development? What role will it play as an international gateway and financial centre that links China and the rest of the world? It's unlikely he'll talk about civil liberties or the political crackdown per se that has rocked Hong Kong in recent years. I think there will be focus on what kind of signal he wants to send to the world about where Hong Kong will go from here and what, just what role it will play in China's economic development.
And thank you so much, as always, Enda Curran there in Hong Kong. Now, joining us to talk about the economy and inflation and everything in between is Sandra Philippin, chief economist at ABN AMRO. Sandra, thank you for joining us. And we need to talk about China, but overall, the Fed, and there seems to be a belief in the market now that central bank policy will change, but actually that they'll engineer a soft landing. Is that your base case?
Well, not that much for the Fed, because I think that the Fed is really in between a rock and a hard place. It has little room to do anything else but hike very, very strong. I think it might be a different story for the ECB, and that's what I would like to talk about, because I think there's something coming ahead for the European economy that we're not really completely aware of, and that is a potential Russian gas stoppage. Yeah. Depending on how far that will go, it will have also implications for what the ECB still can do.
Yeah, and we've seen also, for example, an opinion piece in a lot of the French newspapers by a lot of the French chief executives, energy companies saying, guys, you have to cut consumption now. So what happened? So do you expect actually some kind of gas embargo coming from Russia as something that will happen this year?
It's actually already underway. So if you look at the total gas consumption that Europe gets from Russia, it's about 150 billion cubic meters. It's already down by 60, so that's over 1/3.
Yeah. This is consumption or actually the gas that they're sending over
So
from
this
Russia?
is the supply. This is the supply. Yeah, and so actually while we're talking about embargo measures to kind of have sanctions against Russia, Russia is actually cutting gas as we speak. And the risk here is that it will not stay with this 60 billion cubic meters. No. We think that, it's hard to get inside the head of Putin, of course, but if you think, okay, what does he want to do? He wants to inflict economic damage on Europe, but he also wants to keep some supply going in order to kind of extract the rents from all the price increases that are going on. So we think that's most likely that he will cut another 50 billion cubic meters.
So, Sandra, what does that mean for ECB policy? Do they have to hike rates to a point where we could see a bond crisis?
Well, actually, if that would happen, if there would be a 2/3 gas stoppage of our total supply, it basically would mean that it would lower growth and increase inflation. No. And for the ECB, that would mean that, with the lower growth prospects in the medium term, inflation outlook would probably go down. At the same time, if unemployment rises, that's the same direction. And the energy inflation, I mean, the ECB has limited capacity to do anything about it anyway. So it might mean that actually the terminal rate that the ECB is going for might end lower.
Okay.
And I think that's good news for markets.
So do you see a wage spiral, actually, where we're seeing much more demand for citizens of Europe asking to be paid more?
Well, that's the question. I mean, on the one hand, of course, if inflation erodes real incomes, then there will be a wage demand at some point, and that could lead to the spiral. On the other hand, it could also go the opposite way, because if growth erodes like extremely and unemployment rises, then the whole story about wage growth is gone.
And so how do you see, I mean, at the moment it seems very binary. As an economist, how do you take, and as market participants, how do you take the view on which way it goes?
Yeah, so we're quite pessimistic on how it will go. So we think that it will not stay with this 60 BCM that we're seeing now in the supply shortage. So we think it will go to about 2/3, and that will mean like potentially deep recession for Europe, and that also means the end of the normalization path as we have known it in our base case.
All right, Sandra, thanks so much. We'll come back to the idea that we could see a deep recession in Europe. Sandra Philippin, Chief Economist at ABN AMRO. Now, coming up, of course, it's a big week for European inflation. We have CPI readings for Germany, France, and Spain. So we continue our discussion with Sandra Philippin from ABN AMRO. That's coming up shortly, and this is Bloomberg.
The front loading of interest rate increases is a good idea in this situation, because what you would like to do, if we can, is nip inflation in the bud before it gets entrenched in the economy, get inflation back down toward 2%.
If we do have a recession, it's likely that it would be on the shallower end for two reasons. One, private sector balance sheets are in better shape than at the end of previous business cycles. And two, I think, while inflation is very high, I don't think it's as entrenched, certainly not as entrenched in expectations as it was in previous high inflation episodes, 70s, early 80s.
Well, St. Louis Fed President Jim Bullard, Goldman Sachs Chief Economist Jan Hatzius on the Fed's tightening path and what a potential recession might look like. Now, it's also a big week, I'll say, big week for European inflation. CPI readings due for Germany, France, and Spain. Well, we're back with Sandra Philippin, Chief Economist at ABN AMRO. Sandra, we're kind of game theorying about some of the things that could go wrong. And you were telling me, if all of these things happen, including like a gas embargo, which, we're seeing to start seeing that, then we could see a deep recession. And that's when alarm bells in Europe, that's when alarm bells go out. I mean, a deep recession is a protracted recession, or is it just a very violent recession?
Well, it's very, very uncertain. So I don't dare to say how long that would take, but I mean, there are a lot of things building up here at the same time, right? We keep getting deeper in trouble. So, of course, we have the overheated situation already. We have the huge inflation in Europe. That basically means eroding real incomes because wages are not rising as fast. And at the same time, if you look at the euro dollar, basically buying energy becomes more and more expensive as the euro weakens. So that's already a terrible situation. And then what could happen on top of that, and that is a kind of the new base case that we're thinking about, is that Russia might actually be tempted now to kind of go fast with a blockage of a stoppage of gas to the European continent. And that would really cause a lot of trouble. Because if it goes further than it's already going now, then there will be severe shortages which drive up prices. But also, I mean, it will also could lead to industry stoppages. For example, in Germany, the 6 most energy-intensive industries, if they would face an industry stoppage, they would really cause a huge fallout. And because they're at the start of the German commodity chains, then the cascading effects through the rest of the economy might be huge.
Sandra, talk to me a bit about the US. So the US, again, you have this engineering, right, where Jay Powell seems to be focused so much on inflation that it's almost as saying, look, I'm going to do everything I can to keep inflation under control and to hell with recession. Right.
Well, actually, I wouldn't agree completely with the chief economist of BlackRock, because I think we actually might avert a recession in the US. but who knows? But the thing is that I do believe that the Fed has to move towards this 4% federal funds rate by February 2023, about that time. Because it's a very different situation in the US. I mean, the US inflation is not only much higher, core inflation is not only much higher, but it's also much broader. And the danger is that it will get entrenched into inflation expectations. And then with that high levels of inflation, there might be a different inflation dynamics going on, which the Bank of International Settlements has warned about yesterday. And I think that's a real worry in the US.
So, Sandra, do you see them being much more aggressive, like 75 basis points hike? And I know we keep on saying, look, they're behind the curve.
Yeah.
But why are they so behind the curve? I mean, it was just a couple of months ago that they were saying, look, 75 basis points is off the cards.
Yeah.
And then they did it.
Yeah. Yeah, why are they, I wouldn't know why are they behind the curve. I mean, I think the clear message is that they are, and that means they have no choice but to hike further. To get in front of it, and I don't think there are many routes around that.
Sandra, thank you so much for joining us today. Sandra Philippin there, Chief Economist at ABN AMRO. Now let's get straight to the Bloomberg First Word News. Here is Leanne Gerrans. Hi, Leanne.
Hi, Francine. The US is rebooting its effort to counter China's boats and road infrastructure program, enlisting the support of G7 leaders at their summit in Germany. The rebranded initiative sees the US calling on leaders to fund projects in the middle and low-income countries to the tune of $600 billion over the next few years. Now, Wimbledon's organisers say a ban on players from Russia and Belarus may only last for this year. The CEO of the All England Lawns Tennis Club, Sally Bolton, told Bloomberg the decision was difficult, but it was right for now. Wimbledon announced the ban in April, blaming what it says is unjustified military aggression from Russia. Some highly ranked players are exempt. And NASA has launched a rocket from Australia, the first time the space agency has used a commercial launch pad outside of the US. The rocket lifted off from the Arnhem Space Centre in Australia's Northern Territory late on Sunday in the first of 3 planned launches. NASA will use the rockets to investigate phenomena that can only be seen from the Southern Hemisphere. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Coming up, a CBS News poll found that 59% of Americans disapproved of the Roe v. Wade ruling. We discuss U.S. abortion rights next. This is Bloomberg.
The health and life of women in this nation are now at risk.
The voiceless will finally have a voice.
The termination of a pregnancy is just their opening act. It's just their front game.
I don't know what the limits of this court are going to be.
All civil rights are under threat.
It will save the lives of millions of children, and it will give families hope.
It will have huge implications, economic implications for families.
It takes away their ability to engage fully in the economy.
This decision is not about abortion. It is about power and patriarchal control over women.
It pushes it back to state legislatures all across the country.
You will see certainly a little bit more voter intensity even in swing states and Senate races this fall.
A woman's right to choose reproductive freedom is on the ballot in November.
Well, officials reacting there to the Supreme Court decision to strike down Roe v. Wade. Let's get more with our Bloomberg reporter, Bruce Einhorn. Bruce, I mean, how much does this change the voting thinking of citizens in the U.S.?
It is hard to say at the moment, Francine. For decades, the political calculation has been that while there was a majority in favor of abortion rights, the people in favor of abortion rights weren't as passionate about the issue as the pro-life side. So now the question is what will happen in the midterm elections in the fall. You know, we got a snapshot over the weekend, a CBS poll that showed that the ruling itself was highly unpopular. also said that about 50% of Democrats now said that they're more likely to vote in the fall. So potentially this could have major implications, because up until now the assumption has been that the Republicans had a huge advantage in the fall because they were highly motivated to vote. Democrats, especially younger ones, would be much less motivated to go out and vote. Potentially now that could change things. Nobody really knows. We've never been in a situation like this where there's been a constitutional right that's been around for half a century that's then gone. So we're in uncharted territory here.
I mean, I guess, when do we know, when you look at the midterms, when do we know which way it could go? Do we trust the polls ahead of them?
Well, midterms are still a fair way away, and inflation is high. There are all sorts of other issues that could come back into the forefront. That said, though, this is something that is out there, something that a lot of people who otherwise might have just sat out the election might now be more motivated to go out and vote.
Bruce, thank you so much. Bruce Einhorn, they're covering U.S. politics for us based in Hong Kong. Now, I know a lot of economists are watching us, and a lot of them have had to be sedated because in the last 20 minutes or so, the ECB has announced that the rate decision will be 30 minutes later from that vote in July. So watch out for that. It's 2:15 p.m. local time. Coming up, we talk about the G7 and Russian gold. This is Bloomberg. As G7 leaders pledge indefinite support for Ukraine, Russia defaults on its foreign debt for the first time in over 100 years. Road to recovery early June indicators point to an improvement in the Chinese economy. Meanwhile, Xi Jinping prepares to visit Hong Kong this week for the 25th anniversary of the British handover. And as a crypto crash of the last few months, the industry's Lehman Moment, well, as panic spreads across the sector, we look at the biggest threat yet to its survival. Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, first thing is first, so let's check in on the markets. We've had quite a couple of entertaining couple of weeks. Now, this is where we are today on Monday. Global stocks really extending some of the gains after posting their best performance in a month last week. Now, mining stocks definitely leading a advance in the Europe Stock 600. Chinese technology shares also helping an Asian equity index jump more than 1.5%. Now, remember, we are almost towards the end of June, so there's a quarterly portfolio rebalancing by institutional buyers, and that could be helping equities as investors assess whether inflation is cresting and recession can be averted. So we'll have plenty more, of course, on that. Also, a reminder that JP Morgan's Marko Kolanovic calling for stocks to rise 7% this week as pensions and sovereign wealth funds shift their exposures. If we look at the European map to see whether there's a divergence between a lot of the periphery countries and the ones more in Central Europe, there doesn't seem to be a huge gap. Industrial metals rebounding, oil, European natural gas prices rising, and then treasuries overall actually slipping, pushing the rate on the U.S. 10-year note to 3.14%. In general, yields have retreated from June highs, again, on these growth worries, and this is something we need to keep an eye on, and that we don't know whether this marks the end of the treasury bear market. It's definitely the live debate, dollar dipping. So we'll have plenty more, of course, on the market action. But now let's get straight to your Bloomberg Business Flash with Leanne Gerrans. Hi, Leanne.
Hi, Francine. India's Reliance Industries is reportedly in talks with global banks to raise as much as $8 billion for its planned buyout of pharmacy chain Boots from the American parent. According to Indian newspaper Mint, Reliance is in talks with Barclays, Deutsche Bank, HSB and Standard Chartered. The business runs more than 2,200 stores across the UK, along with some operations in other countries. Advertised graduate salaries have risen to a 6-year high this summer, up 7% on last year. According to research from job search site Adzuna, average pay for university leavers is just above £26,000. The number of vacancies, meanwhile, is up almost 60% on a year ago. Russia has defaulted on its foreign currency sovereign debt for the first time in over a century. The grace period for the two coupons on about $100 million of bonds expired at midnight last night. Russia called the default label a farce, saying it has the funds to cover any bills and has been forced into non-payment. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Now, the last British governor of Hong Kong, Chris Patten, says he's worried about the city's future as a financial hub under increasing control by Beijing. Now, 25 years after Hong Kong's return to Chinese rule, Patten told Bloomberg's Stephen Engel how he believes things have changed.
Well, I think it's perfectly true that the Chinese communist leadership in Beijing has always wanted Hong Kong without Hong Kongers. And I think it's tragic that so many good, decent, honest people have left Hong Kong. I'm pleased that we've been able to provide them with a home here in the UK, over 100,000 in the last few months, and that they've also gone to Canada and Australia and the United States. Why have they been leaving? They see their future clouded by the fact that their children will have a different sort of education, one in which engineering the soul plays the most important part rather than educating children. They have to live in a society in which the rule of law is constantly undermined and under threat. They have, in effect, all the makings of a sort of neo-police state.
Now, I read as much of your new book as possible over the weekend. It's more than 500 pages, but 475 pages in, you talk about the destruction of Hong Kong. So I'm gathering the last few years, the last 3 years under Carrie Lam, it has sealed the fate of Hong Kong, or do you feel it can still resurrect itself as an international finance center?
Well, it's a real challenge. I wrote an essay at the end about what had happened since 1997, taking account of the fact that for 10 years, 12 years maybe, things went pretty well in Hong Kong, not perfectly, but the real problem has been since President Xi Jinping has been dictator in Beijing. And I think he regards the things that Hong Kong has always stood for as an existential threat to communist control. I'm asked again and again by young Hong Kongers whether they should come back to Hong Kong. I've asked by families whether they should come back. It's not an easy answer to give. You can't really expect people to be braver than I would be.
You, of course, in your 5 years running up to 1997, did introduce very controversial electoral reforms to put the selection of lawmakers in the hands of Hong Kongers. On reflection, do you take any kind of blame for igniting something in Hong Kong that wasn't there before, that led to a politicization of this city?
No, I think it's a terrible bit of patronizing to think that people in Hong Kong didn't know anything about democracy, didn't know anything about running their own affairs, didn't know anything about due process, about fair judicial system and so on, that we impose those thoughts on them. It's absolutely ludicrous. People in Hong Kong, increasingly well educated, increasingly prosperous, seeing what was happening in other places, in Taiwan, in South Korea, and elsewhere in Asia, and they couldn't see why they shouldn't have much the same.
Lord Patten, I want to end on just giving you an opportunity to maybe reflect on what you remembered most of that night, that stormy night. Was there a sense of foreboding? I know when you got on the boat, the Britannia, you talked about feeling relief, but also happiness.
I hoped for the best. You couldn't leave thinking anything but that. But by and large, apart from some interference, things went on reasonably well. I think it's just in the last 10 years or so that things have taken a turn for the worse, as I think they have in China overall. But my overall feelings when I left Hong Kong were deep sadness at leaving friends and a place where I'd been happier than ever I've been in my life, and my family had been happier than we'd ever been in our lives. Hong Kong mattered a huge amount to me. I was extremely lucky to have the opportunity of serving the people of Hong Kong. I'll never forget how kind they were to me. I'll never forget how good the civil service were, full of honourable and decent and hardworking people. The whole community was like a Rolls Royce, and it should have just been allowed to go on purring away.
Well, that was Chris Patten, the last British governor of Hong Kong, speaking to our Stephen Engel. Coming up, Russia defaults on its foreign currency, a sovereign debt for the first time in a century. We'll have plenty more on that. We'll also go back to the G7. Our Maria Tadeo is on the ground there, looking at everything that's going on. That's next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, leaders of the G7 are expected to commit to providing indefinite support for Ukraine. At their meeting in Germany, they're also said to be discussing a cap on the price of Russian oil. Now, this comes as Moscow defaulted on its foreign currency debt for the first time in a century. Well, let's get more on the talks now with Wolfgang Muncha. He's president and co-founder of Euro Intelligence. Wolfgang, as always, thank you so much for coming on to make us smarter. Now, there are a number of nuances. First of all, there's full commitment from the G7 leaders on supporting Ukraine. Will they lose their population at some point if the cost of living goes up too much?
There is clearly a danger of that happening. We see signs of that happening in Germany, small signs of that happening in Germany. There is a limit, I think, to which Germany is ready to accept all the consequences of this policy. And we're seeing the Russian gas reduction, the flow in gas. It might just lead to a complete gas embargo. That will cause not only a recession, but it will also have the much more serious impact that many industries in Germany will no longer be operating. It would be very serious.
So, Wolfgang, talk to me a little bit about Germany. First of all, you have a chancellor that is, extremely committed. I think extremely courageous. Certainly, compared to what we've seen in the past from, I guess, other chancellors. Is there a danger that he goes in too deep? And also, by doing the Plan B, which is, we close certain sectors, this will have, unnecessary effects on the rest of Europe.
I think you're right. Scholz is committed to supporting Ukraine. But Scholz is also a very cautious operator. And people have been calling him duplicitous and confusing in his messaging. He's trying to please too many people at the same time. I would assume it's a matter of that rather than some hidden agenda that might be driving him. So there is an element of weakness. His party is declining in the opinion polls, and his party still has the burden of having supported Putin in the past and having befriended Putin in the past, and that's now sort of in the process, politically of unraveling. Now, Germany as a whole has made that transition away from its relations with Russia, but support for Ukraine and and being in opposition to Russia is not something I would call unanimous in Germany. Right. It's something more like a 60-40 thing than like an 80-20 thing as it is in the US or the UK, for example.
Are we underestimating the price, actually, of economic growth to deal with this? And if you look at market commentary, we talk about inflation, a possible recession. Like, how deep could we see a recession in Europe?
That's right. It can be quite serious. And, I've been sort of arguing for some time that Putin's strongest weapon in this whole thing is gas. Yeah. Because he can actually trigger an economic recession. I mean, we don't even doubt this is the case. I mean,
but without a recession, or is it a technical recession?
It's not a technical recession. If he cuts the gas, we're talking like -3, -6, -8% stuff that is no longer technical. I frankly personally don't care about technical recessions. If it's down 0.1%,
doesn't matter.
It's just a statistical error margin stuff. But this is real. Yeah. And it is ultimately in Putin's hand, given our dependence on his gas. So this is why it ultimately doesn't matter so much what we're talking about, oil or gold or all these other things that have been addressed at the summit. What is really important is gas, because that's the thing. It's not so much because gas is such a big earner for him. Oil is actually the bigger earner. But it is because of our dependence on gas and the effects it has.
And Wolfgang, I've had you on actually, countless times where we said, well, leaders don't get it. I mean, it's not that they don't get along; it's that they were lacking commonality. Do you think the war in Ukraine means that these G7 leaders are aligned, or if things turn difficult, if economies start, going south, they'll break up again?
I wouldn't call it necessarily break up. But look at what we know. There's going to be a midterm election in the United States. The US politics might shift dramatically afterwards or even before. Yeah. There is potentially a very cold winter in Germany. And again, it's not people freezing. I think the people in Germany will probably be the least of the problem. The big problem is industry. Industry that is reliant, a whole economic model that is reliant on this, and no alternative plan B.
But do we have, so let me look at some of the, the gas, I think it's natural gas trades, and you can see that they're, 5 times bigger than the long-term average. So I'll bring that chart up for you. But is there anything that other G7 leaders can do to help Europe? I know it's difficult, but can the US not send some of the gas to Europe instead of to the highest bidder in Asia?
They can, and they will. But the volumes, I mean, we've done the maths on gas. I mean, the Germans have also been trying to shop gas in Qatar and other places. Right. This isn't enough. This isn't going to help. The German gas plant basically foresees. They have some alternative supplies. They're now talking about the Groningen gas field being reopened again. But this is not going to help us through the winter. Yeah. This is the stuff. Beyond the winter, there's an awful lot of planning going on for the medium term. But for the very short term, which is the recession-relevant stuff, yeah, the US can probably do a little bit more. Right. But, Germany is a country, in terms of population, a third of the size of the US. No, the US cannot feather that.
So if I can, the prescription, I guess, in the short term, what is it from governments in Europe? Do they just need to support the ones that are losing the most?
There will definitely have to be an element of that. And frankly, also Germany will have to support others, because this is not just Germany, because Germany actually has most of the gas storage capacity, and others will want some of the share as well. So this will be a test of European solidarity between Germany, between the small and the small countries. But the main thing that I would foresee in case Russia cuts off, which is a scenario now that is at least a plausible one, there would have to be a very significant fiscal boost. There would have to be possibly a delay in the monetary easing. It would change everything.
Wolfgang, I know you look at ECB rate decisions very closely, and they've just announced that they're 30 minutes later from July. Have you had to take a day off to deal with that? 30 minutes later, what would the markets do?
That's right.
Okay, Wolfgang needs to be sedated because of that, so we'll get back to some of the politics. Wolfgang, thank you so much for joining us. Wolfgang Munchauer, president and co-founder of Eurointelligence. Now, Russia has defaulted on its foreign currency sovereign debt for the first time in a century. It's the culmination of ever tougher Western sanctions that shut down payment routes to overseas creditors. So joining us now for more on this, Giulia Morpurgo from our European credit team. So Giulia, thank you for joining us again. How exactly did this happen? And was it really a surprise? What does it mean for rating agencies?
Yes, so at midnight we had the expiration of a 30-day grace period, which had been triggered by the fact that investors are yet to receive payments on coupons that were due on the 27th of May. And usually you would have the ratings agencies come out and say, okay, we are now in an event of a default. But this has not happened because the ratings agencies, at least the major ones, are banned from covering Russia due to sanctions imposed by the European Union. So this is definitely a bit of a different event of default than usual.
So, Russia, Giulia, at the same time denies this as the default. So what does it mean for creditors? What does it mean for investors?
Yeah, so Russia is arguing that they're not defaulting and that the only reason why the creditors haven't received their money yet is because of the sanctions that were imposed by the US and its allies. So it's saying that it's willing and able to pay and investors just have to take their money, essentially. This doesn't change really much for creditors because their pockets are still empty. But it is arguing that this default is artificial, created by the West, and labeling this situation a farce.
So, Giulia, is this a watershed moment?
Well, the impact could be actually quite limited. First of all, Russia has been in a quasi-default status for months, so the markets have had time to adjust to the idea of Russia being really a black hole when it comes to financial markets. Secondly, the impact that foreign investors have is definitely limited. The last estimate are that foreign investors hold about 20 billion of Russian foreign-denominated sovereign debt, so that's definitely a limited size when it comes to the big picture.
Great, Giulia. Thank you so much. Giulia Morpurgo there from our European credit team. Now, coming up, how the $2 trillion drawdown may be the biggest test yet for the crypto industry. We have more on crypto. That's coming up next. And this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get to today's big take. For a generation of alienated techies, crypto's all-for-one ethos was its biggest draw. Now panic is spreading across the universe. That same ethos is now posing what may be the biggest threat yet to its survival. Well, joining us now is Emily Nicolle from our crypto team and one of the authors of the big take. Emily, great reporting as always. So tell us more about this piece. What did you actually explore?
So in this piece, we took a look at why this crypto bear market, or as it's known to people within the industry, winter, is slightly different to those that have come before. The last one we saw lasted about 2 years, between 2018 and early 2020, and we're definitely firmly in that winter's territory now with the way crypto prices are forming. But there are a lot of things different this time compared to last time, and so that's really what we wanted to take a look at.
So why is it important to think about what's different in crypto, Emily, during this route?
So what's different this time will eventually basically let us preempt kind of how crypto might look when it comes out the other side. The things that we looked at specifically are things that are intrinsic to crypto. So one of the biggest things that crypto is heavily reliant on is an industry of leverage. A lot of traders will up their bets using leverage, making riskier plays, but that also causes contagion across the sector because a lot of these loans that people will take out, they use crypto assets to back them. And then when those crypto prices go down, those loans are no longer collateralized, they get liquidated. And it's usually more than one asset that you use. So it happens across the entire market all at once. There are a lot of different things, though, this time around that might help the crypto market for this winter. One of them being that they are now mostly backed by venture capital funding, or more frequently backed that way, rather than using their own tokens or Ethereum. And that means that they actually have real cash that they can rely on during a downturn, rather than just, being at the whim of the crypto markets itself.
So what might crypto look like, Emily, on the other side of this bear market?
Well, we definitely know that companies are going to be a lot slimmer. We've had quite a few crypto companies say they're going to cut staff this year. There was a lot of a trend of, crypto companies making headlines because they were splashing that cash with abandon. You had them sign sponsorships with Matt Damon and Tom Brady and even Cristiano Ronaldo. Binance signed him last week. So some of that kind of outward spending is going to tone down. Staff are going to get laid off. And the people that we spoke to, particularly actually those in VC, said that this is really going to be a bit of a seismic change in which companies have strong business models and which don't.
All right, Emily, thank you so much, as always, for some great reporting, for some great stories that you could check out on the website, but also on the Bloomberg terminal. Emily Nicolle there from our crypto team. For more on Big Take story, go to Bloomberg.com or by typing NI Big Take on your terminal. Now, Leonardo Del Vecchio, the billionaire founder of Luxottica, has died aged 87. The Italian entrepreneur started a tiny optics workshop in the Dolomite Mountains and ended up as the undisputed world leader in eyewear. Well, global brands Ray-Ban and Oakley were among the scores of eyewear businesses which Del Vecchio bought on his way to the top. But our Tommaso Ebhart, our Milan bureau chief, also really wrote the life and of the entrepreneur, Mr. Del Vecchio. He was raised in Milan orphanage, where he struck out to the northern city and set up in the shop of Agordo in the Alps north of Venice. So his company wrote a series of acquisitions to eventually become the world leader in the industry. Essilor Luxottica, of course, a listed company, is both the world's top eyeglass retailer and its biggest producer of corrective lenses.
I think you're in this kind of like dead zone right now, but as you start to get more information coming in.
The risks are now finally being recognized in the equity markets particularly.
We think there's some vulnerability to S&P earnings.
There's a very significant risk of recession. I think it has gone up.
It's going to be very important to make sure that if we're going to go through a period of pain, we do slay the inflation dragon.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Monday, June 27th. Our top stories today. Russia defaults on its foreign debt for the first time in more than a century as the G7 commits to providing indefinite support to Ukraine. Fallout from the Supreme Court's ruling on abortion. A new poll suggests that a majority of Americans disapprove, including 2/3 of women. And China's Xi Jinping keeps Hong Kong guessing. It's not clear whether he'll attend the city's 25th anniversary of Chinese rule in the midst of a COVID outbreak. Well, welcome to Bloomberg Surveillance. This is the early edition. I'm Danny Berger in London with Matt Miller and Kailey Leinz in New York. Anna Edwards is off today. And Kailey, it feels decidedly risk on this morning, but I have to say this in the year 2022, it's hard not to question its staying power.
Yeah, and that's something we were hearing a lot of strategists talking about, Danny. Mike Wilson at Morgan Stanley, for example, says, yes, we may be seeing a bear market rally right now, but there's limits as to how far this can go. However, it did continue in Asia overnight. It was a broad update for stocks. The MSCI Asia Pacific Index higher by a little more than 1.5%. And really, that was a move led by big Chinese technology stocks. The Hang Seng Tech Index up 4.7% overnight, near a 4-month high. Though I would note there was one stock that sat that rally out, and that would be Tencent. The shares actually fell about 1.6% after Prosus, its biggest shareholder, sold some of its stake in order to fund a share buyback. Even though Prosus back in April of last year, after its last sale, said we won't sell anymore for 3 years. Going back on that now, and 10-cent shares down as a result. Finally, I would note you're starting to see some more optimism around the story in China, the easing of COVID-related restrictions, and signs that activity actually was picking up in the month of June. So that led a boost to iron ore overnight, up nearly 5 percentage points, just shy of $120 a ton in Singapore. But of course, iron ore prices are still down about 25% on a year-to-date basis, Matt.
All right, but a little bit of a risk-on feel to the markets this morning. We have, even after the big rally that we saw on Friday, right, up 3% in the cash rate on the S&P 500, we have the S&P futures up another 0.5%, and investors are getting out of bonds. That means the yield on the 10-year now rising to 3.15. Almost 3.1489 if I go out 5 significant digits. And investors are also not piling into the dollars. They typically do when they're looking for safe haven, so that is not what they're seeking today. They're even buying Bitcoin, although it's only up 0.2% from midnight, but at 21,442, up against the higher end of the range that we've seen over the last couple of weeks. Danny, what do you see in Europe?
It is a pretty broad-based rally, I have to say, Matt, here in Europe. We are off some of the highs that we've seen this morning, but most regions pushing into the green, most of them over 1%. Germany outperforming 1.2%. It is basic resources, it's tech that's outperforming, hence Germany perhaps doing a little bit better this morning. Only region that's down is Italy. Some movers there, which I'll get into in just a moment. But to your point, Matt, of the dollar coming off, a little more risk appetite, you do see a stronger euro this morning, up 0.3%, above 105. But within that rally, within that risk on, there is this deep-rooted feeling of fragility. Part of that is from the yield story. It's not just in the U.S. where yields are moving higher. It's also in Germany. We're looking at Bunds. Those are higher by 5 basis points. Do we get back into this feedback loop where perhaps we're risk on, yields go higher, and then we're worried about inflation again? So this violent circle happens where stocks go lower again. Another thing to worry about is natural gas. Russia cutting off 60% of their supply to Europe. That especially affects Germany. Of course, the German finance minister saying last week it could be a Lehman-like moment. Dutch front month futures, those are higher by another 3% this morning. And finally, Mediobanca, this is what's leading Italy lower, down by 3%. A sad story fueling this one. Leonardo Del Vecchio, the founder of Luxottica, the eye brand glassware maker, dying today, age 87. He actually is the controlling shareholder of Mediobanca, about 20%. So those shares moving lower. But Kailey, in a case of perhaps markets are efficient, but I frankly don't understand them, Luxottica, the company he founded, which he owns a majority of, is actually slightly higher today. So same story, a little bit of confusion there, but Mediobanca, at least the worst performer so far today, Kailey.
Confusion in 2022, Danny? I haven't been confused at all so far this year. And there could be more confusion, or at least more events to watch in the week ahead. First off, of course, we have the Group of 7 continuing their summit in the Bavarian Alps. That, of course, is followed by a NATO leaders meeting later on in Madrid. Then the European Central Bank will be holding its annual forum on central banking in Sintra, Portugal, with top global central bankers to speak at a time of acute concern about inflation as well as growth. We'll also be getting some earnings from major retailers this week, including Nike after the bell today, as well as H&M, Bed Bath & Beyond, and Walgreens, all reporting results. And the latest OPEC Plus meeting on output will be taking place on Thursday. Finally, on Friday, Hong Kong marks 25 years since the handover to China, with a potential visit and speech by President Xi Jinping. The city's new chief executive will also be inaugurated, and we'll have a little more on that in a couple of minutes, Matt.
Yeah, Yeah, very interesting story there, and it'll be great to get the details. Right now, I want to get to our coverage of the G7 summit with European correspondent Maria Tadeo and Washington correspondent Anne-Marie Hordern in Bavaria, Germany, where the meeting is taking place. So Russia has defaulted on its foreign currency sovereign debts, the first time in a century. Of course, we haven't allowed them to pay, so clearly that was going to happen. It's the culmination of ever tougher sanctions that shut down those routes, those payment routes, and froze central bank assets. Let's get more with Maria on that story first. Maria, clearly they see this as, I think Foreign Minister termed it, a farce.
Yeah, and of course, the Russians have said today on the record the country has not defaulted. The issue here is that they have not been allowed to pay. That is their take on things. But of course, we know that when U.S. officials, European officials got together, particularly Mario Draghi, to the former head of the European Central Bank, designed this package to really target the Russian Central Bank. That was the idea, to really prevent Russia from doing business as usual. Now, that is for the Russian debt. But today here at the G7, there's also the political aspect from this. G7 countries, of course, over the weekend meeting here in Bavaria, and they have reiterated their support for Ukraine. In fact, we're expecting they will put it in writing in a statement today by the end of the meeting, saying there will be, quote, open-ended support for Ukraine as long as the war continues. And of course, Matt, Russia made sure to remind everyone the war continues when it shelled the Ukrainian capital just a few hours before leaders gathered here in Bavaria. So the war really dominates this entire meeting.
All right, Maria, thank you so much. And it sounds like the hills behind you are quite literally alive with the sound of music. Bloomberg's Maria Tadeo. Let's continue the story there. President Biden rebooting his efforts to counter China's Belt and Road Infrastructure program, enlisting the support of G7 leaders. Let's get to Anne-Marie Hordern for the details. So, Anne-Marie, what is Biden hoping to get out of this G7 meeting? All right, Anne-Marie, I think we might have some issues there with your sound. But Kailey, of course, this is a really big meeting in G7. It also comes amid a gas crisis in Europe, amid the war. So usually an event that doesn't have a lot of market implications, Kailey. It certainly could this time around.
Absolutely, which is why all eyes are on Bavaria this week and later on in Madrid for the NATO meeting, as we think about what further these alliances can do in order to combat the war in Ukraine, as well as the ripple effects of it. And of course, for President Biden, there is a bit of domestic concern as well in the aftermath of the decision on Friday from the Supreme Court to overturn Roe v. Wade, which is something that the president clearly must have on his mind, even as his eyes are on foreign policy, Danny.
Exactly. So much to pour over. Let's get back to Anne-Marie and Hordern to help us do just that. So, Anne-Marie, we're just discussing what Biden was hoping to get out of this meeting.
Well, I think first he's really hoping to just make sure the unity amongst these G7 partners is strong, because at the same time they have this commitment to Ukraine and they are putting harsh penalties on Russia. One coming out of the G7 is that they are going to ban the import of Russian gold. At the same time, they want to make sure that they are still able to try to protect their economies, because we do know that every leader here at home is dealing with a very difficult domestic agenda because they have higher inflation, higher consumer prices across the board, also including grocery bills. So that's really part of the president's agenda here. When it comes to the Supreme Court decision, I heard Kailey mention that this is something that is certainly looming large on the president while he's here in Bavaria speaking to foreign leaders. He talked about this right before he flew on Air Force One coming over to Europe. He was asked if he thought the Supreme Court was broken. He said, I think they've made some terrible decisions. And it's quite awkward for the president in the sense that these leaders know that his party backs expansion of women's reproductive rights. But at the same time, when that Supreme Court decision came out, a number of these leaders had a lot to say about the state of politics and where the U.S. is going. Most notably, UK Prime Minister Boris Johnson said this is a step backward. So domestic issues are certainly looming large on this president, as well as the other G7 leaders as they meet here in the Bavarian Alps.
Anne-Marie, thanks so much. Bloomberg's Anne-Marie Hordern there reporting from Bavaria, Germany. Now from the EU to China, where Tencent plummeted after Prosus announced plans to sell more of its $134 billion stake in the Chinese internet giant, that all to finance a buyback program. Now that move reverses a pledge to hold on to the full shareholding. Bloomberg's Tom McKenzie joins us now for more. So I think they pledged something like 3 years. They wouldn't touch the stake. So how bad is this for Tencent?
Yeah, a bit of a U-turn from Prosus. And there's a bit of context. I'll just briefly touch on it. So Prosus is the e-commerce giant. It was spun off from Naspers, and it has this idiosyncratic story, which is it has this massive stake in Tencent. It's the biggest holder of Tencent shares, 134 billion. Yes, they said they weren't going to sell it down. Now they've reversed that because they say they want to fund share buybacks of their own stock, which is valued, if you strip out the Tencent holding, at essentially negative, because 134 billion, the valuation, that is of the valuation of their Tencent holding, their total valuation, their assets, far less than that. So they want to boost the valuation of their own assets with these share buybacks. So that's the idiosyncratic story around this Dutch e-commerce company, which happens to have this massive stake in Tencent from its legacy to Naspers. There's the bigger story, though, about what signal it sends around Chinese technology, of course. At a time, you've been discussing this, as some within the markets are turning more positive because you've started to see the foot on the throttle, or at least the neck of Chinese tech, being slowly taken off by Chinese officials. The likes of JP Morgan increasing their exposure through their China fund to Chinese technology. The signal that this sends, potentially, there's a little bit more uncertainty about where this goes in terms of regulatory clampdown, because Naspers and Prosus have great insight, of course, into what happens within the tech space of China. So some will take this as a negative.
Speaking of uncertainty, I see that the South China Morning Post, at least, is saying Xi Jinping is going to visit Hong Kong, which is interesting in that it's his first trip outside the mainland since the pandemic began, and that we still see real COVID issues in Hong Kong. What do we know? Have we been able to confirm this trip?
Yeah, you touched on a couple of the key points there, Matt. No, we have not been able to confirm it. The language is making it slightly open-ended as to whether or not, or unclear as to whether or not the president actually ends up in Hong Kong. The importance, as you say, the fact that this would be the first overseas trip, yes, within the boundaries, of course, and the territory of China, but the overseas first outside a mainland trip for Xi Jinping since January of 2020. Then there's the COVID-0 policy, and increasingly you're seeing divergence between Hong Kong and the mainland when it comes to COVID-0. Hong Kong has started to relax some of those curbs. As a result, you've seen about 2,000 cases. You've even seen cases within the incoming government of Lee, who, of course, is expected to be signed off by President Xi Jinping on Thursday and Friday. There's some reporting that he's going to visit the city but stay in the cross-border city of Shenzhen. Other reports suggesting that maybe he's going to do it virtually. So we haven't nailed this down completely, but there's a symbolism, of course, of President Xi Jinping being in the city, okay, for the first time as well since the national security law, and of course the undermining of many of the freedoms that Hong Kong and Hong Kong citizens and companies have been used to. So we continue to watch this.
Absolutely. We'll see whether or not he does make an appearance, virtual or physical. Bloomberg's Tom McKenzie, thank you so much. Now, I want to get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. And I really do want to stick with that China story first, because Tom was alluding to the fact that people are growing more positive on Chinese technology stocks. You saw that in the overnight Asian session in which all of those shares rallied. So no surprise, you are seeing that feeding through into some of those ADRs here in U.S. trading. The likes of Alibaba up the better part of 2% before the bell. You're also seeing some relief coming into the metals complex today with those prices going higher. So stocks tied to that are doing fairly well as well. One being Freeport-McMoRan, which is higher by about 2.3% before the bell. And finally, I actually have a pair of stocks I want to talk about. They're related in the fact that it's the same Goldman Sachs analyst, William Nance, adjusting his ratings that are moving the shares. On the one hand, he upgraded Robinhood from sell to neutral. That stock is up about 4.4%, but he downgraded Coinbase to sell with a $45 price target. That would be 28% downside from Friday's close. He's talking about the continued downdraft in crypto, how that could weigh on revenue. So as a result, that stock is down about 3.5%, trading at $60.54 a share. And remember, Coinbase, Danny, already has lost about 3/4 of its value just on a year-to-date basis.
Yeah, especially considering all those reports of some labor changes, employment changes over there. Of course, we'll talk about crypto later on the show. But first, coming up on their annual report, Agustin Carstens, Bank for International Settlements General Manager, on what inflation means at this moment and what central banks should be doing about it. And is it crypto's Lehman moment? How the $2 trillion drawdown may be the biggest test yet for the industry. You can read about it all in today's Big Take, and we'll discuss it with Glenn Goodman, eToro cryptocurrency consultant and the author of The Crypto Trader. This is Bloomberg.
Welcome back to Bloomberg Surveillance. This is the early edition simulcast on both radio and television. I'm Matt Miller in New York with Kailey Leinz, Danny Berger with us out of London. Now, I'm looking at a chart that shows the underperformance of gold, which for you, those of you viewing on television, is in white here. Radio listeners obviously don't care the colors, but the commodity index in blue has really come back and outperformed. Now, the reason is clear. As Kailey just pointed out to me, obviously oil has stomped on gold's performance since the pandemic and since the invasion of Ukraine by Russia. Joining us right now is Eddie Vanderwalt of Bloomberg's Live to tell us if this may change, because it looks like gold may be banned out of Russia as well. Eddie?
Yeah, so you know what? That's a really interesting narrative. Gold obviously is a little bit under pressure with central banks hiking rates, fighting inflation. So that narrative is weighing on gold. Now, the thing with the ban of flows out of Russia, on the margin, supply really doesn't matter that much for the gold price, because pretty much unlike other commodities, which once we've produced it, we consume it, it's gone, we've got to produce it all over again. With gold, pretty much all the gold we've ever mined sits above ground in a vault somewhere, or as jewelry that can be recycled. So if you cut off a part of the supply, you don't change the balance of that of what is available above ground that much. So this is not really going to move the price that much for gold.
I have to say, one of my favorite fun facts is all the gold in vaults near where we are right here at Threadneedle Street at the Bank of England. Speaking of the Bank of England, you and the team put together this great MLive pulse survey every single week. I mean, it feels really, really bearish UK, the results you got from last week.
So yes, the market is extremely bearish on the UK. This week, however, we're looking at broad asset outlooks, and I think what people are telling us is that they're very bearish on the outlook, for most asset prices, but not so much on volatility. They're expecting prices to start bottoming out, but absolutely on the UK, you can't find a pound bull anywhere.
Yeah, Eddie, I think we would all welcome some calmness when it comes to the recent volatility. Eddie, thanks so much. Eddie Vanderwalt of Bloomberg MLive. And for more market analysis, check out MLive Go on your terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Danny Berger in London. Anna Edwards is off today. Now, keeping you up to date with news from around the world, here's the first word. In China, the COVID-0 policy appears to have the spring outbreak under control. New infections have been under 100 a day for almost 2 weeks. No major cities are in a widespread lockdown, and restrictions in Shanghai and Beijing continue to be lifted. Analysts say that the plan by some G7 nations to ban new gold imports from Russia is largely symbolic. That's because the industry has already taken its own steps. The London Bullion Market Association removed Russian gold refiners from its accredited list in March. Meanwhile, other commodities are hitting powerful headwinds after a first half dominated by the supply turmoil and inflationary shocks. Bloomberg's index of spot commodities has fallen 13% from a record. Still, Goldman Sachs says prices haven't topped out yet. In a new note, Goldman analysts say that growth and demand are slowing down, but not falling. And in sports, the Colorado Avalanche won hockey's Stanley Cup for the third time in the team's history. Colorado beat Tampa Bay 2-1 to win the series 4-2. Tampa Bay had won the last 2 National Hockey League titles. And as for the Conn Smythe Trophy, which goes to the MVP of the tournament, the winner, Matt, was Cale Makar, who's just 23 years old. He scored 29 points in just 20 Stanley Cup playoff games.
Wow, amazing achievement, and congratulations, I guess, to Colorado. I have to say I didn't watch any of the games.
I didn't either.
same. I'm the worst kind of hockey fan. I'm not only fair weather, but fair weather for the Caps. Unless the Caps are doing well, I literally pay no attention whatsoever. All right, well, coming up, something that I know we're all paying attention to. It's the annual report. Agustin Carstens, Bank for International Settlements General Manager, their latest report on inflation, and at the same time saying that central banks need to step it up, despite the fact we've seen jumbo rate hikes. Is it enough? Do central banks need to keep pushing the envelope, even if we get closer to a recession? All of that next. This is Bloomberg. This is Bloomberg Surveillance Early Edition, and here's what you need to know. Russia defaults on its foreign debt payment for the first time in more than a century. That's as the G7 commits to providing indefinite support to Ukraine. A new poll suggests that a majority of Americans disapprove of the U.S. Supreme Court's decision overturning the constitutional right to an abortion. According to the CBS News survey, 59% oppose the ruling. That includes 67% of women. And China's Xi Jinping keeps Hong Kong guessing. It's not clear whether he'll attend the city's 25th anniversary of Chinese rule in the midst of a COVID outbreak. Hong Kong recorded almost 2,000 new cases on Sunday. I'm Danny Berger in London, in for Anna Edwards. Matt Miller and Kailey Leinz are in New York. And Matt, the rally continues starting into a new week, but as yields move higher, I can't help but wonder, does inflation become the scare again, or as recession is on our minds, can stocks really continue to rally?
Yeah, very interesting question. I think a lot of market participants are grappling with the same thing. It looks like the answer right now is that investors doubt the central bank's resolve. The S&P futures are up another 0.5% after the big rally that we saw on Friday, 3% in the cash trade. And investors are selling 10-year debt right now, the yield climbing up to 3.16. The dollar index is also lower, so no one's piling into the dollar for safe haven as we have seen so often of late. And then Bitcoin is rising slightly. It's only up 0.1% since midnight, but it did pretty well this weekend, up to 21,411 and rising with that positive sentiment across other risk assets. Kailey, what do you see in terms of the pre-market movers?
Well, I'm taking a look at technology, not just U.S. tech stocks, but Chinese ones as well. We already talked about on this program how tech really rallied in Asia overnight, and that is continuing when it comes to some of those ADRs here in early hours in the United States. The likes of JD.com up 4.6%. You have Baidu up by about 2.4% as well, but those U.S. tech stocks are also continuing their gains that we saw last week. Tesla is up the better part of 2 percentage points, and you also have Nvidia, the chip maker, higher by about 1.4%, Danny.
Well, European stocks also moving higher this morning, Kailey, but I think the cross-asset picture is even more interesting because it indicates perhaps some fragility about this rally. We do have the euro higher. That's reflected in what Matt was talking about. Risk on means not necessarily that bid for havens, up 0.2%. But another thing we have to contend with this week, we're going to get a bunch of flash inflation readings for Europe, expected to culminate in a record 8.5% CPI for Europe. What does that mean for the ECB? They're meeting in Central along with other central bankers this week, and their need to continue to hike rates. Now, yields on the German 10-year yield, those are going higher, up by about 6.5 basis points. Do we get to that point where higher yields once again spook equity markets? We're not there yet. What also might spook markets is the natural gas and more broadly gas picture in Europe. Russia has cut off about 60% of gas flows to the region. Germany, especially a problem. Will they have enough energy supply to get them through the winter? We're looking at Dutch front month futures, those up 2%. And finally, today, sad news, the passing of Del Vecchio, the founder of Luxottica, the Ray-Ban maker. He owned a majority of Mediobanca. It's an Italian bank, about 20% of it. So with his passing, there is a market consequence as well as a tragedy, of course, for him and his family. But Mediobanca, Matt, that stock moving down by 2.5%.
All right, very interesting story and legacy there. Let's get back to the markets here in terms of tail risk. What are we looking at in the second half? Top strategists and economists shared their predictions with us.
The risks of a downturn are increasing. Probably we're looking towards the end of this year. But the only silver lining, or one silver lining we'll point to, is that we don't yet see the scope for a deep or prolonged downturn.
You're going to have, I think, a slowdown. It could be a pretty significant slowdown. We're already seeing financial conditions tighten dramatically across the world, particularly in the U.S., and I'm very concerned.
We've raised our estimate probability of a recession in the US. I think we now think it's cumulatively about 50% chance, like a flip of a coin over the next couple of years. So I think that all those factors are going to mean a clear downturn in growth.
The war between Russia and Ukraine can get worse. We don't know what's going to happen with the relation between Israel and Iran. And there is the tension building up in Asia on the issue of Taiwan. So I would say geopolitical risk are the things I'm most worried about.
Risk that, Russia and Ukraine military altercation is going to intensify. That's a risk. Of course, that is also going to put further upward pressure on energy prices and makes the Fed's job difficult.
Big constraint, of course, in Europe is the periphery, not only recession risks overall, but the sovereign-related risks, which complicates it further for them.
So the Bank for International Settlements is out with its own outlook. Its latest annual economic report, the BIS, says the world economy risks entering a new era of high inflation, with central banks need to keep in check. Joining us now for the more on the report is the BIS Settlements General Manager Agustin Carstens. Agustin, thanks so much for your time this morning. I wonder what your forecast is now for inflation. How do you see it panning out with central banks now starting to act?
Well, thank you very much for having me. There are different dynamics going on right now. Certainly, some of the causes that have generated an increase in inflation are still alive. Part of them, the supply chain bottlenecks, commodity price pressures. To some extent, the policy impulse is still there, and at the same time, expectations have started to be adjusted. Some pressures on the labor market are being more obvious, but the good thing is that monetary policy have started to act in a forceful way. Now we know that there is some lag between the effect of monetary policy on inflation, but we're starting to see some adjustments in expectations. So what is important right now is for the actions that the central bank to persist and enact forcefully in a flexible way. I think that we are at the beginning of the effort of turning inflation around given the efforts of the central banks. So far so good, but we still need some ways to go forward.
In terms of the possibility of central banks raising too much and driving economies into a recession, how much is that a worry for you? Well,
I mean, we believe that they have started the process relatively early. We have a relatively good starting point from the point of view of the resiliency of the economy. Another factor of risk that could make deeper the impact of the monetary policy actions into activity, namely the response of the financial market or the nexus between the financial sector and the real economy, hasn't shown signs that are of concern. So there is a possibility that it can be pulled off without a major impact. I mean, yes, with an impact on GDP, but not going all the way into a recession. But it's a narrow path, and certainly we cannot discard the possibility of a hard landing, although from our point of view, is relatively small at this stage.
Okay, so there is still a path to a soft landing, even if it's narrow. How does your view of history inform that? What similarities do you see for this moment in time relative to the 1970s, for example?
Well, in 1970s, the shock to the oil shock was far bigger, and the energy dependency on oil was also much bigger. In this case, the oil shock is smaller, but probably it's broader. We have not only energy, but we also have some commodities. some basic materials or inputs for production that have been affected. So it's a little bit broader. At the end of the day, what can make the difference, and I think it will make the difference, is that the monetary policy frameworks, the credibility on the central banks is much better set up today to fight inflation than before.
Are we underestimating, though, Agustin, the staying power of this energy rally, considering China hasn't even come back on the map? What happens when they do? And is it foolish for the market to start to turn around in their inflation expectations, given that likelihood?
Well, you know, the slowdown in economic activity will also reduce the demand for energy. And there is a very agile process of substitution there from energy sources, and additional sources of supply can come into the market. No, I think that this is not the first oil shock that we have seen. So I think it's very hard to call, based only on oil, the possibility of a recession.
Okay, finally, I want to ask your thoughts on something that may be considered a commodity or a currency or just a correlated asset to equities, but cryptocurrencies. We have seen a dramatic decline and a deleveraging in this space. I'm wondering how you view the collapse in the cryptocurrency space overall and what threat it may pose to broader financial stability.
Well, as we have said all for quite some time here, stable coins, the vast majority of them are all bought stable. They depend on their value on trying to import their valuation on other assets, and the backing is not reliable. And in some cases, it's not even that backing, as was the case with Terra Luna. In addition, many of these currencies are used only for speculative processes, and through DeFi, the possibility of leveraging exponentially is very, very high, and therefore the financial risks that are being taken there are huge, and this was meant to happen. I mean, this was not difficult to anticipate that at some point this type of actions were going to happen, and it's very likely that they will continue to happen because they have these type of currencies have inherent vulnerabilities.
Okay, and of course, cryptocurrency stabilizing this morning, but to your point, Agustin, how long will it last? Agustin Carstens there from the Bank for International Settlements. Thanks so much for joining us today. Now, coming up, we're going to continue the crypto conversation. Glenn Goodman, eToro cryptocurrency consultant and the author of The Crypto Trader, joins us next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, former U.S. Ambassador to Nato, Kailey Hutchison. That's at 12 p.m. in New York, 5 p.m. in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Danny Berger in London. Anna Edwards is off today. For a generation of alienated techies, crypto's all-for-one ethos was its biggest draw. But today's Big Take shows how that same ethos is posing what may be the biggest threat yet to its survival. Panic is spreading through a market that has gone through several major downdrafts in its very short life. Joining us now is Glenn Goodman, eToro cryptocurrency consultant and the author of The Crypto Trader. Glenn, great to speak with you today. You think that this crypto crash is just part of a broader story. What is that story?
Really, that's the thing, is that usually I'm looking pretty closely at specifically crypto-related indicators, crypto prices. But over the last few months, I've been looking more and more at the NASDAQ in particular, but the US markets in general. Because frankly, the correlation between the two, between the crypto markets and even the S&P, has become very, very close. But as I say, particularly NASDAQ and tech stocks. And I think this is partly because during the big crypto boom last year, we had this situation, of course, where more and more institutional investors were getting involved, Before that, okay, years ago, Bitcoin was a kind of hobbyist's thing, and then lots of retail traders got in, and then finally the big or big-ish institutions arrived in 2020 and 2021, and they see it differently from the Bitcoin purists. The Bitcoin purists, of course, believe in the story of Bitcoin as the currency of the future. Some people believe that it's even going to be the next global reserve currency. But the institutional people don't necessarily believe that. They were in it for speculative reasons in many cases. And so, as a risk-on asset, when they start getting worried about the economy, particularly the US economy, then they start selling. And so if you look at the ups and downs of the NASDAQ and you look at the ups and downs of Bitcoin, yes, the Bitcoin and crypto ups and downs are more exaggerated, but they're still usually in the same direction.
I wonder what you think about retail investors that just got involved for FOMO reasons, right? I mean, the initial Bitcoin purists were very libertarian, didn't want to see any kind of regulation, thought this was a great way to, in a sense, fight the state. But the people who got on board, the Wall Street bets kind of crowd, if you will, they were just in it for the money as well.
Yeah, it was really frustrating to go through that because, with my eToro hat on, I'm talking about the big institutional investors, but with my writer of the book, The Crypto Trader hat on, I had a lot of readers writing to me and reading my book during the boom and then writing to me and saying, we're getting in now, we're getting in more now, we're getting in more now. And, if you look at my Twitter feed, you'd see that I was constantly cautioning people because I did most of my buying personally in around July, August 2020 as the market was just starting to take off in a big way. Bitcoin was still only around 10,000 at that time. And I did most of my selling, as I told my followers, around about $45,000, $50,000. And actually, that's useful to remember because don't forget that we're still about, thank you, we're still about double where we were when I started buying. That was only about 2 years ago. So, Bitcoin isn't doing that badly if you look at it over a 2-year horizon. But anyway, back to those retail traders, painful because they were all getting in far too late. And I was just telling people to be cautious, but they won't be cautious because they get caught up in the whole hype of it all,
So follow Glenn Goodman on Twitter is the takeaway I'm hearing from this. So I do wonder, I love this comparison you draw to the dot-com bubble because we did see a lot of investment going into blockchain, any sort of crypto-related project. If we do enter a crypto winter sort of period, what long-term effect will that have on the industry if that investment dries up?
Well, what I would say is it's been extremely positive that the investment was there in the first place. Because if you think about it, we're talking about extremely risky, small tech startup projects in most cases with cryptocurrencies. And in normal times, if venture capitalists were looking at projects like those, they'd be extremely skeptical, and rightly so. But the fact is that because everybody got so excited and were just buying up anything during the crypto boom, just like the dot-com boom, loads of projects get invested in. Some of them, frankly, don't deserve to be invested in, but a lot of decent little fledgling projects that otherwise wouldn't have got that funding because people would have been too skeptical. They did get that funding, and that works its way through the system even during a crypto winter or a dot-com bust, and then you get the leaders of the future emerging thanks to that investment.
Glenn, thanks so much for joining us. Great to get your take on this. Glenn Goodman is eToro's cryptocurrency consultant, and of course, he's the author of The Crypto Trader as well. By the way, tune in to Bloomberg every Tuesday, Bloomberg Crypto, I should say, at 1 p.m. New York time. Kailey and I co-anchor that. Tomorrow, we're going to speak with Mary Catherine Lader, the former rising star at BlackRock who defected to DeFi. Very interesting story there. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz in New York. Danny Berger with us out of London. Anna Edwards is off. Now, Tom Keene, co-anchor of Bloomberg Surveillance, the original, joins us now to talk about, first off, Tom, what's your single best chart to start the week?
Well, the single best chart to start the week is where are we? Into the mid-year, into the end of the second quarter. That's on Thursday. Where are we? And it's really a mark, Matt, of how far down we've come in this bear market. And the answer is down, down, down we go. And there's been a lovely 8% bounce. And we're mean reverting. We're almost there to one of the moving averages I use, which is arbitrary, and far more the midpoint of 2 standard deviations of volatility. And we're mean reverting within a mean bear market. Where to from here? Well, we'll have to see.
Well, Tom, probably the perfect day then to have on Lori Calvasina of RBC.
Yes.
I'm really looking forward to that conversation.
Yeah, and she's just perfect to get us started here in the week, Danny. Lori Calvasina here will parse growth and value, and also the allure of small caps and EM. I'm not sure what that allure is like, but there's a lot of different themes to talk about here. Just to begin the week, and on yield as well. George Goncalves will join us as well from Mitsubishi. Really looking forward to that with yield 3.17%.
All right, Tom Keene, co-anchor of Bloomberg Surveillance, thank you so much. We're looking forward to that conversation as well. And as for what else we are looking forward to today, I will be watching for Nike earnings after the bell. This will be their fiscal fourth quarter. And it's worth noting, going into the print, analysts have been steadily cutting their profit expectations for this company because they're noting a number of headwinds, including the lockdowns in China that could weigh on sales there. Plus, there's tough comps from a year ago. And as always, guys, we're going to be focusing on the commentary around supply chain issues, as well as any shifts in consumer spending this company is seeing in the face of inflation, as that could be a broader indicator for corporate results, Matt.
All right, well, I'm watching something going on over in Europe. Sintra is a conference in Portugal for the ECB, or held by the ECB, I should say, and central bankers from around the world gather there. They are at a moment, the ECB, where they really need to watch out for rising interest rates and how that spurs on more fragmentation, as we've been calling it a lot lately, which is the spread between peripheral bonds and the bunds. Gianna Randau has a great story on the Bloomberg terminal talking about Christine Lagarde engineering a tool to try and deal with this that I highly recommend people watching. But we're going to be hearing a lot more about the ECB, and I'm going to be watching the euro very closely over the next week.
Yeah, especially considering we have a lot of flash inflation numbers coming out in Europe. We're expected to get a record inflation number at the end of the week. Exactly. I mean, really crazy stuff. If the economy is in danger from gas, I mean, what do? They have to keep hiking, right, if they're going to get that inflation under control. Well, perhaps on a lighter note, today I am watching Wimbledon, probably quite literally. I have to say I don't have my ticket, but I live pretty close to Wimbledon, so maybe I'll just sneak on over later today and try my best to get in. But this is the third Grand Slam where we're not going to have athletes from Russia or Belarus. Serena Williams, she's making a comeback after a wild card entry. Djokovic, she's going to feature in the men's draw as well. I think it'll be a really interesting one. Matt, I don't know if tennis hits your sort of zeitgeist of sports interest.
Yeah, no, I love to watch tennis. Absolutely fascinating. I highly recommend reading Infinite Jest by David Foster Wallace. They talk a lot about pro tennis there as well.
Matt Miller's Book Club.
Great note to end the show. There you go. It's the Monday edition of Book Club. That's also it for Early Edition. More surveillance is ahead. This is Bloomberg.